Hey guys, in this episode, I'll be talking about some stocks which you guys can watch out for swings, I would say. And these are some stocks which you guys can watch out for the whole month of January. However, I'll be posting up more stocks now, but these are some stocks which are alright in the verge of breaking out. So you guys can watch out these stocks and the setups which they are currently forming. I'll be defining the risk and the areas where you guys can probably accumulate these stocks. And if you guys are not able to accumulate these stocks, still I would want you guys to probably watch out the stocks which I'm keeping it or which I'm keeping on my radar. So the first stock which I am keeping on my radar happens to be Rites. Now this is a railway themed stock and we clearly saw that the railway themed stocks are getting a little hotter after the realty pump. So this is something which you guys can surely keep in your radar or maybe on your watch list. And the reason being why, basically the reason being why is not because the railways theme stocks are getting hotter and at the same time seeing good spikes and delivery margins. Rather, the setup which this stock has, and if I wanna, just break that setup down would be if you guys clearly see that this had a huge imbalance on the left side which clearly got covered up by more and more imbalance. We went to this downside, took out some liquidity, built a base, and we kept on moving up. Post this, we saw a good break of structure, and after that we kept on moving higher highs. So the formation was a clear higher high. However, personally I do not trade higher highs, but the trend of a higher high trend which usually depicts is a bullish trend. Now, coming back to this, all I want from this current setup is my entry was right here and it is currently 4 or 5% up from my entry. If I want to size up more and I want to, just grab up more gains in the same entry, I would just refine down my entries to this place where the fair value gap is as well. So I think this gap should get filled because it has not been filled, and if this does not get filled, I would just try to ride this whole trend until probably like 580s to 570s. So I'm still fine with getting out on a 1:3 hour, and if I still do not get out there, I would just want to hold the swing. My risk over here happens to be 1.65%, but that's all dependent upon if you had entered along with me or maybe with this setup which was posted around 511 or 512. So all I want currently to, basically size up huge in this stock would be I want a mitigation of this zones of somewhere around, or rather from somewhere around 516 to 520. This is where I'll be sizing up more on my entries, and my risk over there would just happen to be the same, which happens to be somewhere around 503. So yes, if you guys are planning to buy rights and if you guys are planning to swing on something and not to trade intraday, then you guys can surely watch out rights. And the zones which I would define would be ranging from somewhere around 516 to 520. So this is a zone where you guys can accumulate this with the stop loss being 503 to 500. Watch this out, keep it on your radar. If you guys want to buy it, you guys can do that as well. So it's all dependent on you. The second stock happens to be Balrampur Chini, which really had a very bad beating, and all of the sugar stocks, including this, had recently saw a very bad beating. Now over here we see a clear imbalance, and this imbalance has a lot of nums, voids, and inefficiencies. So directly playing an imbalance like this, which is not completely matured up, and this imbalance is completely, or rather I would say very young to play out. All I want is more and more liquidity grabs over here because the reaction from here was quite good. You guys can clearly see the reaction was quite impulsive. Now what does this depict? If you look at the reaction currently here, then you see a liquidity grab here, a reaction from there, a gap up posted that by the inefficiency fill, and the reaction from here clearly shows that there was a lot of buying interest. I wouldn't call that as an institutional delivery or a good order block, but this was a good origination of this point, and then you see a huge move. Again, this is coming back, taking up liquidity from the same zone. Now, the thing which you guys need to keep in mind before accumulating Balrampur Chini would be drawing a demand zone over here might not play out. Why? Because you guys can clearly see it took a graph from here first. The second graph was from here. This might be a scenario that the third graph would be right from here, or maybe it has taken the third graph and it might not come down more until and unless we see Nifty falling up. So these two were the zones where we saw the graph. So if I want to point this out with the paintbrush, I would just probably point this, the first graph, the second graph. Now maybe the third graph is done and you guys can probably enter somewhere around here. So the zone can be ranging from 389 to 395. This can be a box zone where you guys can start accumulating. From a long short perspective, if I want to draw out the ratio, if I am assuming that we are entering somewhere around 392 to 390, my stop loss is going to be here, which can be somewhere around 3%. I know it's going to be a little more comparatively to the setups which I usually form, but the reward here happens to be quite huge as well because I'm going to change the whole or chase the whole imbalance. So you guys can clearly see that the risk which I am currently having over here is somewhere around 3% to 4%. Maybe you can keep your size less and try not, oversizing you. If you guys can enter the retracement here of somewhere around 385 to 380, that can be good as well. So probably position yourself in such a way that you are only exposed to this stock 50% at the current price of probably somewhere around 390 to 392. Post that, you guys can surely trim this entry down to somewhere around 388 to 380. Now this might reduce your risk and at the same time build up the average price, which is going to be good as well. So this is how you guys can plan up your entry, yo. Even if you guys do not, or aren't able to enjoy or rather, enter this, you guys can clearly see that missing out Balrampur Chini does not mean that you guys have missed this stock and this was the only stock which is going to be pumping for the next week or maybe the next month. You guys can probably scout out for different stocks too. And even if you guys miss this entry, it's fine. Just wait for the location to be right. That should be the supreme goal of this entry execution. Post that, all I want is a little bit of retracement from you, and it's not going to be you where I'm going to be accumulating this. So yes, like I said, I'm going to be waiting for a retracement. And if I want to buy at the current price, if I have 100k, I would just be accumulating this at the current price for 30k. The risk happens to be somewhere around 3.8 to maybe 4%. If you can chop down your entries down to 380 to 384, the risk is going to get reduced to 2%. The reward happens to be very huge here. Even if you are not a trader who can hold Balrampur Chini for this long, you guys can trim your reward down to 6%, which happens to be somewhere around 420. So I think from a risk to reward ratio, it's like a 1 is to 3 R, and from this risk to reward ratio, it happens to be 1 is to 1.7 R or something like that. So it's kind of fine, and you guys can probably watch out for this twin too. You can keep Balrampur Chini in your radar. Now the third one happens to be JM Financial. I think the setup currently building up here happens to be very good. The highs are kind of equal, but keeping it on your radar over here, I mean, keeping JM Financial in your radar would help you understand that if you look at the current structure of JM Financial, it is currently trading at the highs and it has started consolidating near the supply. Now, if a stock usually starts consolidating near the supply, it happens to be good, but it's not necessary that anything which is consolidating near the supply is going to, break out or something like that. You guys need to clearly or, simply watch the structure. Now, the structure over here, what it tells us is that, it had an inefficiency here. It got filled up yesterday. Now, I think a liquidity grab can be, can happen here. And the liquidity grab zone for me would be 97, and we honestly do not know where we might see the wicks too. So we might take a liquidity graph from your as well and from your as well. So there has been no inefficiency fills to your as well. And we can see a somewhat or the other of fair value gap and a little small fair value gap. So you probably can expect prices to go down till your as well. Now from a long short entry perspective, I would just want to enter JM Financial your right at this week, and the risk over here would be to 2.5%. Again, this is going to be a little more, and the reward over here happens to be right up to 8% or 10%. I am not estimating anything, and I'm just keeping the supply maybe on the radar. So by keeping this on the radar, you can expect the prices to probably mitigate this zone out first, move up, mitigate the last high, and then start moving up or maybe start boosting out. So that is what I expect. This is not the move which I expect, but yes, an impulsive move from you can be expected. Also, with the fact that if Nifty moves up, your entry points can be triggered maybe from here or to this week, and the risk is going to get reduced here if you can chop down your entries to the best average price. The fourth stock happens to be engineering construction stock. If you look at engineering India, it happens to be a stock which has honestly outperformed the whole market. And with this fact, I think this whole sector from an infrastructure perspective has a good catalyst too. And this structure is currently getting matured, and this structure is not something which you can play out directly today or maybe tomorrow or the next week. Wait for this structure to play out. I think my entries are going to be somewhere around this place, which happens to be 258. I am not going to build a long short ratio as of now from a risk to reward perspective. I just think the risk is going to be less if you guys can enter this around 258 or 250 or 256, I would say. I don't think we are going to get to somewhere around 250. That was the last liquidity grab, which happened to be somewhere around 252. So I think I'll be expecting a retracement out here as well. The setups everywhere happens to be the same, and I'm very conservative about my entries. From a former perspective, I usually do not like taking entries until and unless I really think that the same stock might move intraday. From a swing perspective, I like it. I like, keeping my entries conservative. So from a retracement perspective, I would just maybe accumulate 20% at the current price and wait for a retracement to this zone where I might add 50% of more size, and I might just wait for a huge banger move from here. Consolidation more is going to be a good sign with respecting its demand zone, and I don't want any breach. So if you see a breach of this zone, then don't attend or try to attempt this entry, I would say. And you can just keep this on your radar as well. The last stock happens to be Rossari Biotech. Now this happens to be a chemical specialty stock. Chemical specialty stock, except for Chambal fertilizer, has not performed that great, or this sector does not have a catalyst like the other sectors, especially like realty, media. So from a structure perspective, I really like this stock. A good base got rejected, huge wicks, so watch out for that. Your stops might get taken out. So you see a lot of wicks over here too, a lot of wicks over here too. So the risk over here is quite less. It's restricted down to 2%. From an entry perspective, I think the current price over here is good. I would not wait for a retracement here. So Rossari Biotech play is going to be all on this base building, then a huge move, and again we are building the same base at the zone where we saw the previous impulsive move from. So it's currently trading at a good demand zone. From an entry perspective, you can maybe try entering somewhere around 800 to 792 with a risk of 2% to 2.5% depending upon how much you exactly want to risk. And the reward over here, I'm keeping it a little contracted, and I'm not aiming for much gains. But from a risk to reward perspective, I'm basically expecting, by risking 2%, I'm expecting a gain of 5.5 to 6%. So that's basically a 1:3 R. So I think it's going to be good even if you can manage out two trades, which is going to give you a 1:3 R or 1:2 R. I think you just need two good trades to probably manage up the whole month. These are the stocks which I'm going to be watching for this week and for the upcoming week too. I mean, basically for the upcoming week, I'll be sharing more structures if I find any of them worth it playing. That's it for today's update. I'll see you guys in the next video.